Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Asian stocks rose on optimism that China may announce stimulus measures to revive its economy following disappointing data and an upcoming press conference by the top financial regulators. Now, several Fed members also spoke yesterday, hinting at potential further easing in the US monetary policy. Meanwhile, Germany reported a significant slump in business activity, particularly in manufacturing, which also reflected in the broader Eurozone numbers. The euro experienced weakness following this data. Good morning, JK. With the downturn in European business activity, do you think the weakness in the euro will continue?
Hey, good morning, Swaraj. Yeah, let's start with China because China has indeed announced a lot of stimulus measures for the economy. Uh, Main point being bank reserve requirement has been cut by 50 basis points. 7-day repo rate has been cut by 20 basis points from 1.7 to 1.5. And there has been a lot of relief given to mortgage loans, including cutting the down payment. They've also reduced the medium-term lending rate and the prime rate by 0.25 to 0.3%. Even the central bank governor has said that monetary policy should be complemented with fiscal policy measures. So they have given quite a bit of stimulus measures today. Of course, the market has not reacted much, particularly in the Chinese yuan, but the stock markets in China and Hong Kong have reacted very positively. China is about 1.5% up, and then Hang Seng is up by about 2.5%. It has been expected for quite some time, but the extent to which they have announced are somewhat more than what the market has been expecting. So going forward, we should expect some more positive response from the market. Although other Asian markets like Australia, which normally is quite directly correlated with the Chinese markets, has not reacted much. Japan is higher because Japan was closed yesterday and has reacted to the big rally in the market in US last week. But otherwise, yesterday the focus was entirely on the business activities, particularly global PM, S&P Global's PMI numbers. And what stood out was the big slowdown in German business activity. The composite index falling for the fourth straight month to 47.2 in September. This is the lowest level since February, and it's well below the forecast of the market as well. The contraction has been seen severely in manufacturing, and the services has just held above the expansion border. So it actually is pointing to a deeper contraction in private sector activity. And the customers has been reporting highly cautious approach. Even the investment approach has been quite subdued. So all in all, it's not making a good reading. Even French PMI also came much lower. It had got a boost last month because of the Olympic Games, but that has also come down. So there was a sharp reaction from euro after this fall. It had fallen about 0.5%, but since then it has stabilized by about around 1.11, and not actually waiting for more clues from the US economy, because the all focus is now on Fed rate cuts and whether the Fed will go for heftier cuts in the coming months or not. And that depends on how the data comes from the US economy. Yesterday, we did have some indications, on the business activity level in the US, where manufacturing was still in the contraction territory, but not falling as much as it was in the previous month, slightly better than expected. Services sector was quite steady. Important observation in the US PMI was that companies held back on hiring and allowed employment to fall for the second successive month. And more importantly, the prices charged for goods and services rose at the fastest rate since March, and this is giving some indications that the inflation may be on the rise in the coming months. So the markets are quite closely observing these data points to assess whether the Fed will be cutting rate further by 0.5% or 0.25% in the month of November. As of now, the probabilities are slightly below 50% as per the CME discounting. But we have very crucial data on PCE number on Friday, which will be preceded by the GDP number on Thursday. The GDP is expected to expand by 3%, which is quite, quite an impressive number if you look at the growth rate recorded by other major nations. I think inflation will be the most deciding factor. If we do see, not falling further or slightly inch up, then I think we can see, dollar inching up. So to answer your question on euro, whether it will fall further, I think more focus is on US general US dollar trend right now, which in turn depends upon the Fed's approach. But overall, if you look at yesterday's price action, euro has fallen against many other currencies. So euro crosses there on the selling side. So euro was in general weak, but not as weak against the US dollar. Yesterday we also had the PMI number from India, where we saw some, the composite PMI drop from 60.7 in August to 59.3, as per the flash data. 38th month of rise in private sector activity, but it is the softest level since December 2023, particularly in the manufacturing, and even the service sector was lagging. But if you look at the broader picture, the Indian PMI has been in the expansion territory for much longer than many other countries, in fact, for more than 2 years now. And so there is no concern as far as Indian business activity level is concerned. Yesterday's price action in the dollar overall was some strength in the dollar index. This was mainly led by fall in the euro. However, we did see other currencies remaining more or less steady, and commodity currencies somewhat on the gaining side because of Chinese stimulus measures. As far as the Indian rupee is concerned, we saw strong buying emerging at the new low, cycle low of 83.4550, and that continued throughout the day. Oil buying as well as nationalist banks buying for probably on behalf of the central bank has continued, and market closely observing the flows, clues on the flows, as well as the Chinese yuan movement, where the nationalist banks in China have been seen supporting the dollar at around 7.05 levels. So overall, it was a very rangy market, but a lot of economic news to digest. And of course, we'll also have a important event in the weekend when the leader of the ruling party in Japan will be chosen, and there are three main contenders, and their policy eventually will decide when or rather their outlook will decide when the next move from Japan on monetary tightening will happen. As of now, markets remain cautious, and it looks like there will be no hike by Japan till December, although the Japanese yen is not really weakening much based on these factors. Thank you.
Thank you, Vic. And quickly summarizing, China has announced stimulus measures. Bank reserve requirements have been cut by around 50 basis points. Lots of relief provided to mortgage loans, like reducing down payment, as well as cut in the medium-term loans. Chinese yuan has not reacted much. However, stocks in China and Hong Kong have reacted quite positively. Services, when it comes to Eurozones, the services PMI has held up somewhat, but the manufacturing sector in Europe seems to be in trouble as per the latest readings. Euro lost around 0.5% against the US dollar post this data. And focus for the global markets is on whether Fed will go on for heftier cuts in the coming meetings. When it comes to Indian PMI, the composite number dropped, and we printed the softest level since December 2023. But the numbers for both manufacturing and services has been in the expansionary region for the past 2 3 years. For USDINR, strong dollar buying emerged at the cycle low of 83.4550. Oil as well as nationalized banks were seeing buying dollars at those levels, similar to a trend we are observing when it comes to China and the PBOC. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.